Hi everyone, and welcome to episode 4 of the FIXPod, a podcast series where we look to explain and demystify different areas of financial services and market structure for the next generation of leaders. I'm Jack Hill, Equity Sales Manager at Euronext and Co-Chair of the FIX Next Generation Steerco. Today, I'm kindly joined by James Baugh, Managing Director and Head of European Market Structure at TD Cowen, to give an introduction and overview into the sell side. Hi James, welcome, great to have you.
Yeah, good morning, thanks for being here.
To kick things off then, we'll go back to basics. What do we mean when people talk about the sell side, and where did this phrase come from?
Yeah, good question. If you think about it in the context of firms like ourselves, I guess we get categorised as investment banks. But one of the key kind of functions of an investment bank is to raise capital for companies. By the issuance, by the selling of securities, selling of stock to the market. So it's that process that stuck, and that's the label that we've been given as sell side.
Sure. And then in terms of the actual clients you're servicing, what do they range from? What's your typical client that you're dealing with?
Yeah, I guess again, thinking about it in the context of the function of a bank, of an investment bank, you can think about it in two ways. One is, as I said at the outset there, the raising of capital, and that tends to be the global kind of banking division, and then separate to that is the markets division, which is where we fit, where TD Securities fits, and it's those clients that we provide execution services to, that I think in the context of what we're discussing today is where we look to service those those global institutions, those asset managers, the big pension funds that we all invest in, but also hedge funds, proprietary trading firms, market makers, and also other sell-side firms as well. So it's fairly broad in spectrum when we think about the execution services that we provide and who we're providing them to. Sure,
definitely. And why do these kind of firms like the asset managers, the big hedge funds, why would these types of firms need a sell-side broker? What kind of execution services do you provide directly to these firms?
Yeah, again, it's a fairly broad church, but if we kind of use the pension fund analogy, these funds are managing many multi-million pounds worth of investments on behalf of us, on behalf of our future investments, our future pensions, and often not, they'll be rotating out of particular sectors, particular stocks, particular names, as the market dynamics are changing around them. And they need firms like ourselves to be able to execute those orders.
Sure.
Now, these orders, by their very nature, are sizable in terms of notional, in terms of the amount, and therefore these orders are worked over multiple days, multiple weeks, sometimes months, and the idea here is that we have the skill, the expertise to manage those executions over that period of time, to meet the objectives of the client, to manage the implicit costs of execution. And what I mean by that is not creating that market impact, not moving the price negatively against what our clients are trying to achieve. And there are a number of ways that we do that, and again, loosely speaking, you'll hear terms like high touch, low touch, program trading. So they're the three kind of main channels of execution. Again, depending on the size, the scale, the complexity of the order that we're working. There are other aspects of execution that we also provide, as a market, as an industry, the sell side firms are also providing prime broking financing facilities, again, to enable clients to be able to rotate out of certain sectors and to be able to execute orders.
So kind of helping and assisting with clients with their asset allocation and changing how they're allocating different portfolios then, I suppose.
Exactly,
in terms of the actual assets that you're assisting with this execution for them, is it solely equities, or do you look at multi-asset like fixed income, FX or anything like that as well?
Yeah, so the markets business, TD Securities, we're multi-asset. So the division that I work in, as you referenced at the start of the conversation, initially the business was Cowen, a US investment bank. That was purely an equity business. Subsequently, back in March 23, that was acquired by Toronto Dominion Bank. So we're now part of the TD Securities, the TD Markets business, alongside our fixed income, FX, commodity colleagues. So it's the full gambit.
Sure, and then in terms of that leads quite well, because we're actually looking for our listeners into other areas of podcasts we can do, and I think we're going to look at fixed income and FX and that kind of thing as well. So keep an eye out for the future episodes on those asset classes as well. Then moving on, James, in terms of other, obviously you talk about execution services. What other kind of services do you provide to these clients? I mean, do you look at research or anything like that as well?
Yeah, and I think that's a crucial part of what we offer, in the sense that if you think about that kind of workflow, that process of a client, a fund manager, making that informed decision to again rotate out of a particular sector or target a particular stock, a particular name, a particular company. A lot of that decision-making process is driven by research and understanding the ins and outs of a corporation, of a company, gives those fund managers that that knowledge, that understanding of a company as to whether that company's succeeding, doing well, whether the share price is growing, or perhaps not doing so well. So research is a big part of an investment bank's workflow, and alongside research, corporate access, actual kind of physical access to these companies, to these organisations at board level, again, to better understand the inner workings of these organisations.
Sure, interesting. And then in terms, obviously, we've spoken about the actual clients and the services you provide to them, so execution, corporate services, research. And let's move on into the actual internal workings of a sell-side desk. So how does a typical day look for a sell-side trading desk?
Yeah, I mean, we're all going to be a little bit different, but essentially, we're all early risers.
Yep.
We have to get in 6:30, 7 o'clock in the main. Maybe I'm a little bit later in the role that I do. And really what that's about is it's just kind of digesting overnight news, any regulatory news announcements related to any particular corporates. Again, thinking about how that's going to impact the share price into the open and over the day. It's also looking at any economic indicators that may be forthcoming during that particular day, or again, if there are any particular index rebalances that are coming up, anything that's really going to change the stock price in a particular name. And then it's really about communicating all of that information to the client, having a really good understanding of the holdings of a particular client, so you can make sure that the information you're giving them is targeted to their needs, to their requirements. So that's all kind of happening, pre-market open. Market opens at 8 o'clock, and then you're working all the client orders thereafter, either via the high touch desk, low touch, etc. And then we finish up with the closing auction at 4:30. and then we make a dash for the door. Ideally, there's always going to be end of day kind of mop up stuff, making sure again we're meeting clients' requests for settlement requirements and so on and so forth. And then there's always an element of socialising and relationship building with clients. Particularly as we get towards the end of the year, it tends
such as fixed conferences, etc.
Exactly right. And actually, I think it's certainly for me, it's an enjoyable part of the industry and the role in doing the networking.
It's a great kind of community we've got, isn't it, in our industry?
Exactly, and it feels more so than perhaps some of the other industries that I have friends working in.
Sure. And you talk about kind of like the early start to the open and then the closing auction at the end of the day. Do you see kind of like a ramp up in activity as we cross over with like the US opening in the afternoon, for example?
Yeah, very much so. And you probably heard me talking about 24-hour trading, and I think that one of the question marks that we have, particularly in Europe, is extending the trading hours is one thing, but you also have to appreciate, as you quite rightly highlight there, that 50% of all of the executions in European equities happens after the US opens.
Sure.
So that's 2:30 London time.
Yep.
We then do see quite a significant pickup in activity in business for the remaining couple of hours of the trading day, which means there's a large chunk of the day where it's actually relatively quiet.
Sure. Definitely, so you could be focusing on things like new business, I suppose, and stuff like that as well.
Exactly, yeah. Tuning the algos.
Exactly. So for the next generation, which this podcast is targeted at, what skills would be useful to work in the sell side?
Yeah, it's a good question. I mean, apart from being able to get up early. No, look, I think...
Not a snoozer.
I think that the relationship building, I think, is still a critical part of what we do on the sales side, and that sort of goes a little bit against the grain, given the drive to electronification. But I still think that from my own experience and being lucky enough to be here at TD Securities and to be able to build a business, having those relationships has been super important. But yeah, again, it depends on your kind of individual skill set, meaning whether you'd be better suited to work on the high touch desk, or if you're a little bit more quantitative in nature, then you might be steered a little bit more towards the low touch, the algorithmic trading desk, and there you obviously need to be able to navigate your way through Excel and maybe to be able to kind of visualize data using platforms like Tableau. And just have good attention to detail.
Sure. And then you mentioned electronification. Obviously, FIX has been instrumental in that over the last couple of decades. How has electronification changed the business over, say, the last 30 years?
Yeah, wow. I mean, 30 years is a long time. Unfortunately, I've been around for most of those 30 years. I actually flip it the other way a little bit, and that is that over kind of my time in the industry, what's really driven electronification has been regulatory change. And we have to kind of row all the way back to kind of MiFID I, where prior to MiFID I, if you were to trade a UK share, and I'm going to show my age by calling out Vodafone or BP, probably not the two most relevant names today, but back in the day they were, you could only trade those names on the London Stock Exchange. MiFID I came along and said, actually, we now need to introduce competition. And they removed that concentration rule, and that meant now you could trade BP across a number of different platforms. And that's really what started to then drive electronification, meaning that fragmentation had to be stitched back together again. And that's where you have the sort of the advent of the algorithm, looking through those different liquidity opportunities. Electronification has made the market a lot quicker. Arguably, again, you can take both sides of this, but arguably has reduced costs,
Yep.
and I'd like to think has ultimately achieved better outcomes for clients or end investors like you and I.
Yeah, definitely. And then kind of moving on to more of a kind of personal question, obviously you're head of European market structure here at TD Cowen. What does the market structure role entail?
Yeah, look, simply put, I think market structure, and we do put market structure at the kind of the heart of the business here, and of course I would say that because that's the role I do, but it's very much about understanding where the liquidity is.
Sure.
Which is not an easy question to answer to, but it's also understanding what the quality of that liquidity is, when you get there, and if you kind of use those two dynamics and understand what the client objectives are, then that gets you hopefully the best outcomes, and underlying those kind of base principles, you have to really understand and get in front of some of those structural changes, so new venues, new order types, different ways of getting business done more efficiently, better. And then the other aspect to it is, as we've already mentioned, and that is understanding the regulatory changes and how that's going to impact the market and how we look to get business done. And actually understand how it impacts not only our clients' business, but also our business. And I think that's why market structure has become a thing as the markets have got more fragmented, more complex, as the regulators have been, making their changes over the period, and how, again, we try and mitigate some of those negative impacts and manage those costs and those objectives for our clients.
Perfect. Well, thank you very much, James. That was a very valuable and insightful conversation, which I'm sure our listeners will appreciate. So thank you for your time. And thank you to our listeners, and please keep an eye out for future FIXPod episodes.